Which club stands out as the most prestigious on Wall Street? We contend it's the Trillion-Dollar Club, comprising 6 stocks, each commanding a valuation surpassing $1 trillion. Microsoft, Apple, Nvidia, Alphabet, Amazon, and Meta platforms. By 2035, the club will probably experience substantial growth, with companies from various sectors achieving a valuation exceeding $1 trillion. Therefore, let's explore one potential contender for reaching a $1 trillion valuation by 2035. Welcome to Money and Investment, where your financial future starts today. Ever wondered why starting to invest when you're young is a game changer? Let's dive in. Investing in the stock market might seem daunting, but it's a powerful tool for building wealth. Why? It's all about time and compound interest. Starting young means more time for your investments to grow. Think of it like planting a tree. The earlier you plant, the longer it grows and the bigger it gets. Worried about risks? The earlier you start, the more time you have to recover and learn from market ups and downs. And if you're starting at 50, no worries. It's about choosing the right strategies suited to your stage in life. Palantir Technologies, NYSE, PLTR. Let's begin by examining Palantir's current size to gauge its potential for future valuation. As of the latest data, Palantir holds a market capitalization of $51.6 billion, positioning it as the 350th largest company in America. Undoubtedly, Palantir faces a considerable journey to enter the $1 trillion club. To achieve this milestone by 2035, the company would need to expand nearly 2,000% or 20 times its current valuation. This equates to a compound annual growth rate, CAGR, of approximately 32%. Interestingly, since its initial public offering IPO in 2020, Palantir has maintained a CAGR of 31%. For perspective, consider the S&P 500, a benchmark index with a historical lifetime total return CAGR spanning over 70 years, averaging 10%. Even in more bullish periods, the S&P 500's CAGR remains notably below 30%. As an illustration, examining the period from March 2009 to the present, a notably bullish phase in the stock market, the S&P 500's compound annual growth rate, CAGR, averages only 16%. Indeed, while stock market indexes such as the S&P 500 exhibit lower volatility compared to individual stocks, a closer examination of individual stocks reveals that achieving and sustaining a 30% compound annual growth rate, CAGR, is feasible. For instance, if we analyze stocks individually, it becomes evident that several have attained or surpassed a CAGR of 30% over the past decade. Advanced Micro Devices, Microsoft, and Tesla, as illustrated in this chart, have achieved a CAGRs equal to or exceeding 28% during this period. Notably, AMD boasts an impressive 10-year CAGR of 46%. Many of these high growth rates are attributed to the increasing demand for artificial intelligence, AI. However, companies like Adobe and Salesforce, which share similar software-focused business models with Palantir, have recorded lower CAGRs of 23% and 16%, respectively. Let's start with understanding Palantir's core function. In essence, Palantir develops software platforms designed to assist its clients in managing and leveraging their own data to achieve operational efficiencies. Consider the National Health Service, NHS, in the United Kingdom as an example. It operates on an extensive scale, catering to over 56 million individuals and handling nearly 1.6 million patient interactions each day. Each interaction generates new data that requires recording, posing challenges for on-the-fly analysis. Consequently, administrators often resort to retrospective, centralized analysis, which can be costly and may yield limited real-time insights for improvement. Nevertheless, the NHS has experienced notable success through the implementation of Palantir's software. For instance, at 2 London-based hospitals, the inpatient waiting list decreased by 28% following the adoption of Palantir's software. Furthermore, operating room utilization saw a significant increase of 5.7%. As Palantir continues to integrate artificial intelligence into its software platforms, the potential for expanding its customer base grows. However, the precise trajectory of this growth over the next decade remains to be seen, and only time will reveal its exact shape and scale. While Palantir possesses a robust business model and widely used software, attaining a $1 trillion valuation by 2035 presents a formidable challenge. The company must sustain its revenue growth and expand its customer base. In its latest quarter ending December 31st, 2023, Palantir achieved a 32% year-over-year increase in commercial revenue, accompanied by a 55% rise in commercial customer count compared to the previous year. These gains, primarily in its commercial sector rather than government-focused segments, could potentially support a 30% compound annual growth rate (CAGR) for the company. Additionally, the escalating demand for AI-driven tools and big data analytics may fuel further acceleration in Palantir's growth rates. However, achieving a $1 trillion valuation within the next 11 years appears unlikely. While Palantir is regarded as a strong company and a viable investment, surmounting the substantial hurdle of $1 trillion by 2035 would demand consistently explosive growth, a feat that few companies can accomplish. Nonetheless, for long-term investors seeking buy and hold opportunities, Palantir remains a stock worthy of consideration. Ready to start your investment journey? Explore our channel for more insights on making smart, informed investment choices. Remember, it's never too late or too early to start investing in your future. Join us at Money and Investment for more tips and tricks on building your wealth. Subscribe and turn on notifications so you don't miss out.